So we just got a very shocking jobs report that nobody saw coming. It came out of left field. And I know we just made an episode saying that it looks like things have been moving smoothly and we might avoid a recession. But as always, they always got a new shocker to just rip your hair off. So here we go. Let's get into detail about this jobs report, bro, because it's not looking too hot.
Yeah, they definitely did shock us because we were not expecting all this that came out. And now you saw the stock market react to this on Friday. So it says that June job reports, the U.S. job growth cooled down in June. And it was actually by a large portion. So in this graph right now, this is basically showing you the monthly changes in jobs, right? From June 2022 to June 2023, as you can see, it's the lowest number we've seen basically from month to month. So it was concerning, but what's more concerning is this right here. The total was down from a revised 306,000 jobs in May and was the lowest since the streak began. And this is talking about the June job report. So Rel, if I was expecting something to be around 6,000 and I get 209,000, how are you going to react to that, bro?
It's a shocker, bro. Like you said, you've seen it in the stock market. It didn't really react to it too well, man.
Yeah, exactly, right? So it was not good news. And that obviously did have an impact on the stock market. So you guys can see right here, when the news came out, this is showing you guys the S&P 500 just for that particular day. So we started off, normal like we do, but then we ran up all the way up. And then from Rel's perspective, he's going to tell you, because I'm just looking at the chart, but it went straight down. Literally, it ended lower than when we started.
Yep, they took all the gains back because everybody was like, "Oh, the market's going up." Everybody got super bullish, and then they took every last penny of those gains back and then some.
Exactly, and then this is why this is important, right? So we just made a video saying, did we avoid a recession? And we might have, because at that time, data was looking pretty good. We didn't see this news come out. There was no news about jobs. And I've been telling everyone, I'm skeptical of the job report. I don't see the job report always going up. It just didn't make sense to me. So when I see this, personally, not to sound negative, I actually like it because I'm like, okay, this makes sense. Because as I said, I'm in the industry and I'm seeing people not be able to get hired. I'm seeing people get fired actually and not getting the new jobs. So when I see numbers going up, I'm like, it's kind of concerning, right? So now I'm seeing it. This is kind of good for me. At least I see this. What do you think?
Yeah, I mean, it's what the Federal Reserve is trying to ultimately do. And at the end of the day, they're trying to slow it down because the more job that's available, the more inflation continues to rise and it's a threat. And so seeing this is kind of good in that regard, in the sense that their efforts seem to potentially be working their way into the economy. Remember, it kind of takes a while for these rate hikes to trickle into the economy. So maybe this is the beginning of a new trend. We'll see.
That's a fact. And this is the good part, right? So this chart is essentially showing you the hit. And the hit was actually in the retail sector. It also says job gains continue to be moderate in the services sector, driving the slowdown in June. So, Rel, you want to talk about the whole service sector job and how that impacts inflation possibly?
Yeah, because the thing is, when it comes to inflation in general, the reason why the Federal Reserve wants to pretty much, they're not going to say it, right? But they want people to lose jobs is because when there's so many jobs available for everybody, these employers have to compete with each other because it's like, you guys have so many options. I got to incentivize you. I'm going to pay you more than this guy and I'm going to pay you more than this woman. And so when they're paying their employees more, then that brings up the prices of products as well, because we know the consumers are the ones who's always going to really take the hit. And so inflation continues to thrive like that. And so as you see job gains in service sectors, remember, as the service sector, jobs it was abundant. There was so many jobs in the service sector, but now as you see, it's starting to slow down. So they're starting to see less jobs available in the service sector. And that may be a good thing when it comes to service inflation, because inflation has been coming down, but service inflation specifically has been a struggle to bring down. So finally seeing that jobs in the service sector are starting to moderate, maybe that could potentially bring us to have service inflation finally slow down. Hopefully.
That's a good point. Now, that's a great point, because at the end of the day, if they're firing people, that means they might be able to save some on margin by actually keeping the cost of their product normal, but they don't have to increase it as much, which is the whole inflation stuff that you're talking about. So it might definitely be a possibility. But this is the thing, guys. So There is news right now, and I'm going to put the link to this article for sure in the description. But this is the thing, right? It says this is basically talking about the 2-year Treasury yield. And right here is the thing that you guys have to pay attention to. Investors overwhelmingly expect the Fed to raise rates at its meeting later this month. Okay, this was July 7th. These numbers do not appear weak enough to change the expectation. So what he's talking about is basically everything that came out in the job report and the Treasury yield, everything of that sort. So when you look at it, the June inflation is for July 12th, which is this Wednesday that you guys are going to see everything. And if you look at what's going on, it's not necessarily looking too pretty. And we also spoke about this. Just because they stopped interest rates, right, from rising just 1 month, doesn't mean it was going to be paused for the rest of the year. That's not what it meant. And we're clearly seeing this. So, Rel, you want to talk about this real quick?
Yeah, definitely. And I know you said like the June inflation comes out July 12th, just to specify, especially for podcast listeners, it's CPI comes out on Wednesday, just so y'all know. Yeah. So be on the lookout for that, because that's going to severely affect potentially we're about to show you here. But as of right now, you can see that everyone's expecting that the Federal Reserve is going to raise rates by 25 basis points, which is 0.25%. We have a 92% chance that they will raise it by 0.25% in their next meeting on July 26th. Mm-hmm. And then what we see here is that they're going to, at least the expectation is that they're going to pause it in September at that elevated rate. Mm-hmm. And then November, they're going to do what? Raise it again. So a lot of people don't realize that we're expecting a raise not only in July's meeting, but also in November's meeting. That is the current expectation. And then they're going to hold it there. And then right now they're saying that they may have the first rate cut in January. It seems that January may be the first time that we cut. But once again, these numbers here fluctuate, because before the first cut was supposed to come in September, then it got moved to November, then December, and now they're talking about January. So I kind of take that with a grain of salt. But one thing's for certain is we should see a 25 basis point rise in July, and it looks very likely to happen in November as well.
And something you guys, we've been talking about this a lot. We're definitely going to put this in the description, but you guys have to look at the 1 day, the 1 week, the 1 month. It definitely changes, right? So you can see like 52 to 86 to 93 to 92. So it's going to fluctuate, but this is going to give us a rough estimate of what is possibly going to happen. And it's important because when you look at it now, you have student loan payments coming back, you have high interest rate environments, and then now you have the job report. So did we avoid a recession? Possibly with other data, yeah. Is it still possible? Yeah, inflation when it comes out, like when we see the numbers for June, is going to be very important. Like when we see the CPI numbers, it's going to be like, okay, is this good? Is this bad? It's going to be very, very crucial, because based on that decision, this whole numbers for, October, November, December, January, all that could change. So you guys have to pay very close attention. And I'm not really sure about what you think is going to happen, but in my opinion, I would say we're probably going to see more than 2 interest rate hikes in this year, because I don't think it's going to be that great. I really don't.
I think if anything, if the numbers are showing in this trend right here, right, where jobs are starting to slow down, if anything, they might not even need the November hike, because that means that the economy is slowing down, and they're like, hold on, let's not do too much, because inflation's already coming down. Even last time we showed everybody that core inflation started to come down a little bit. We'll see what the CPI numbers say, but if the CPI numbers come out on Wednesday saying that we slowed inflation down yet again, plus jobs are coming down, that's actually starting to get a little dangerous when it comes to recession. It's like, hold up, is the economy slowing down a little too fast? And so if the economy is slowing down too fast, then they don't need the November hike, and they could just kind of stay where they at and potentially even start to cut if things get astronomically bad. So it's kind of, if the economy is slowing down, why raise it? So I don't know. I don't see more hikes than 2. Hopefully not. That'd be kind of crazy.
I pray not, because obviously all my business owners, I know y'all are struggling with those interest rates. I know I am. Right? It'd be bad out here, man. But if y'all like this type of episode, definitely let us know. Let us know your thoughts as well. Also, you guys are probably seeing that we're at 999 subscribers. We hit 1K, and we went down. So y'all gotta hook us up, man. Hit that subscribe button. Help us out. We're handsome young men. That's all we want. Bad talking. Let's go. But once again, you're still watching. Thank you. We appreciate you. Please make sure you like, comment, subscribe to the channel, and hit that little notification bell, because we drop
2 videos a week.
You don't want to miss them. Check us out on Wednesday. But until then, peace.
Peace.
Soundstripe.